CBBC helps companies to network and to learn from China-savvy multinationals and SMEs, understanding the intricacies of doing business in and with China and developing sound strategies for expanding in the fast-changing and dynamic marketplace that is modern China. So just a few bits and pieces about our organization here at the CBBC. You can see, I'm going to scroll down and show you a little bit more. As you can see from this PPT, we have quite a large and wide coverage across the UK and across China. And we've expanded this year into Changsha and into Xi'an. Okay, now you should have a little tool in the top of your screen just to talk you through that a little bit to help you interact. You can see the open and control panel here, the raise your hand panel. This will allow you to draw attention, and I will ask you to do this in a second. We're very happy to take questions. We're very happy to listen to whatever it is that you want to ask, and we can drop it into the webinar as we go along. So we're very happy to do that. If you have a question, just type them in. Okay, great. So the first thing that I would like to ask is if you could raise your hand, please. If everybody could raise your hand, just so I can make sure that you're there. Brilliant. Okay, I can see people raising their hands. So just click on the little button that says raise your hand, please. Make sure that I can see that, that everything is working okay. All right, terrific. Well, this morning we have a presentation from PwC, from Mike Curran and Alan Wu. We have Mike here in London, and we have Alan in Beijing. So the whole point, I think, of this platform is for us to be able to join the dots and reduce geographical difficulties in bringing you guys important information, all right? So that's really our goal. What I would like to do, the first thing I would like to do this morning, I'd like to launch a little poll. We're very curious to see where everybody is. So I'm going to launch a poll right now, and if you could just answer. So it should pop up on your screen. So wherever you are in the world, be that China or be that the UK, please click and tell us where you are. Okay, almost everybody has voted. Okay, I'll just give another couple of seconds for people to vote. And we'll close that. And just so everyone else can see, I'll share where everybody is. So once again, I'm very pleased from the CBBC perspective to see that 40% of our listeners are in the UK outside of London. As I said, one of the things we're trying to do is bring knowledge and information and expertise to people who mightn't have the time or resources to travel to events or seminars or that type of thing held in the bigger cities. So that's great. Okay, thank you for that. So without further ado, I'm going to hand over control. In the joys of the modern technological world, we're going to hand it over to Wayne here in the London office on the visuals, and I'm going to hand over on the audio to Alan Wu and to Mike Curran. So let's just give me a second while I play around with this and do that. Alan, could you speak for us?
Yes, I'm here. Good morning.
Oh, that's terrific. I love modern technology. Okay, so let's just, the next thing to do is make sure that the slides come up. I'm going to try that again. Sorry for the delay here, guys. Just give me 1 second while we fix this. Show. Click on Show at the drop down and Microsoft PPT. And now make it big. Full page. And press play. Okay, we're getting there. We're just having a couple of technical difficulties with the slides. I'm going to pull that back. Sorry for this. I'm going to make me the presenter again. and then I'm going to do it. Okay.
While we're waiting, will you introduce myself? Good morning, everyone. While we're waiting for the slides, I'll introduce myself and Alan to you. My name is Mike Curran. I'm a director in the China Business Group here in London. My role is to help clients enter into China or out of China into the UK. So I am a dual role, helping understand Chinese issues and the UK issues. My role as generally has been helping clients so far is coming from the UK and entering into the China market and actually understand some of the issues relating to the VAT and how to set up in China. I work very closely with my colleague who is the head of the Indirect Tax, Alan Wu, and I'll let Alan just introduce himself and I'll give you some of his credentials to explain how he fits into the seminar this morning. Alan, over to you.
Thank you, Mike. You can hear me, Mike?
Yes, we can hear you loud and clear.
Yeah, okay. Yeah, good morning, everyone. This is Alan. I'm the lead partner in looking after indirect tax practice for our China-Hong Kong practice with PwC. I have been involved with the National People Congress and the Ministry of Finance since 2008 on the study of the China indirect tax reform, so which leads us to today's topic. And in short, lately I've been working mainly on indirect tax and particularly specialized in this what we call the B2B, business tax to VAT reform. Back to you, Mike.
Thank you very much, Alan. I'm just going to actually give you the general introduction. The slides will appear in front of you, hopefully in moments. But I just want to explain how we're going to run through the presentation this morning. It is a complicated presentation generally. And Alan is very good at making the level of this fit to everyone here today. The aim of this is to give you a general overview of understanding, first of all, why the VAT is being introduced, explain some of the issues relating to the VAT. We're then going to go through some of the timelines and the territories involved, and also then lead into a number of examples. And those examples will try and bring out the complications and the issues which need to be borne in mind for dealing with VAT in China. We will then, as we go through all of this, our aim or objective will be that you will be raising questions, and I will field those questions through to Alan. My job will be to very much act as your voice to actually get answer some of the questions as we work through. I'll also actually be raising through David some of the polls just to get an understanding of where everybody is. And one of those polls I'd like to even start now while we're waiting is really to understand how many do you currently have any presence in China, so I can understand really sort of the approach and the level of knowledge you may have. So without much ado, David, I'll let you send that question.
Yep. So another quick poll for us. Do you have a legal entity in China? So this will allow us to understand where you are and how we can help you a little bit more. All right, so the poll is in progress. So please click on. Okay, people nearly finished voting. We'll give it another couple of seconds. Okay, just give another couple of seconds for people, and I'll close that, and I'll share that then with the group.
So what we've now, just so we can put it in perspective, we have what I would expect a reasonable spread of rep office standard entry market approach in China, 25% WUFI, and a mix of agent representation and other types of vehicle over there. So it will. The VAT approach will be of interest to all of the parties who have actually voted in the poll. And I know that we haven't yet got the slides up, but I think just talk generally on the background. I'm just going to pan back to Alan for Anne to actually just walk through where we are with VAT and give an overview and background on VAT. And hopefully the slides will appear momentarily. So Alan, we'll work without the slides. If you could just start the presentation.
Yeah, not a problem. So today's agenda, let me briefly recap. We will take a look at the background of China current indirect tax practice, system, the current system. And then we will go into the reform, why the reform and what is the reform. The third part will be, we'll look at 3 questions that we actually encountered during the first roll of the reform. And the last section is some additional parts regarding the indirect tax system in China. So let me just briefly explain without a slide what is China's current indirect tax system. Unlike other parts of the world that have VAT or GST that only have one system, China's indirect tax system actually contains of 2 types of indirect tax, mainly VAT and business tax. So VAT, the scope was to levy on sales and importation of goods and repair and replacement services. While business tax, it's levy on the scope of all other services other than repair and replacement and the transfer of real and intangible property. So you can see when they design the system, they try to separate the 2. But when the system actually comes in place, the thing just mixed up and then it's not anything but separate. The applicable rate for VAT is standard rate 17%. They have a lower rate of 13% for food and other things. And export at 0 rated, so-called. I'll explain why later on. And the business tax rate range from 3 to 20%. And 3 is more like an installation, construction. Most of the service is under 5%. And then the 20% rate actually is the karaoke or golf. So they figure if you're rich enough to pay golf, you can pay 20% business tax. And on the place of supply, VAT applies to import of goods into China and selling of goods inside China, and the repair and replacement or processing service are provided inside China. While the business tax have a rule saying that if the service provider or the service recipient is in China, then it will be subject to business tax. If the intangible property is being used in China, or if tangible property is being used in China, then they will be subject to business tax. Now the slides, I saw the slide come up, then the next item I'm going to talk about is credit. VAT, like the other parts of the world that have VAT, they have input credit allowed. For business tax, there's no input credit, so every layer gets hit, no credit. And the administrative perspective, VAT is collected by the State Tax Bureau on a share basis. I think we need to go back to the earlier slide. On a share basis, 75-25, while the business tax is collected by the local tax bureau, and it's 100% it's a local revenue. So you can see there's 2 different bureaus going after 2 different types of tax. And one thing that we see is in actual practice there's some gray area, and both bureaus say that this is under my jurisdiction. Okay, let's go to the next slide, slide 6, which is the administrative difference. So from an administrative perspective, China VAT is also slightly or quite different from the other parts of the world. First of all, the refund. If you are in the north, but you would expect that if you have a negative balance on a VAT return, then the tax bureau or the government will cut you a check. But when you come to China, instead of cutting you a check, they will say, well, I own you. You could use the credit for next period, but there's no refund coming for a negative VAT return. And the only refund you will see is when you have an export. They call it the export VAT refund. The rules say 0 rated, but unfortunately in practice, the export VAT refund rate fluctuates. So it's not always a full refund. So there could be leakage, and some of the items being exported is not a full refund basis. On the taxpayer, there's 2 types of taxpayer, also different from most VAT jurisdictions, where either you are in or you can become a VAT payer or you're out. In China, they say if you provide VAT type of service or goods, then you are a VAT payer. If you don't meet the VAT threshold, then you are a small-scale payer. And if you meet the threshold, you are the general VAT payer. The difference being the general VAT payer have a higher rate, 17%, but input credit is allowed. The small-scale VAT payer, there's no input credit allowed, but the rate is lower, it's 3%. Okay, and then let's move on to the next slide, continue with the administrative, slide 7. So on the filing, also China asks for a monthly VAT return on every location that you have an operation. So we have a headquarters at one location and a branch in another location. Both locations have to file a VAT return. And when it comes to foreign service provider or foreign entity, also different from most part of the under VAT jurisdiction, China does not provide a means for foreign party to register for VAT. That doesn't mean that foreign party will not be subject to VAT. Basically, what it means is that either the buyer or the withholding agent will withhold a VAT, send it to the tax bureau, and then under the current system, no one will get any credit. Invoice, also quite different. In most VAT jurisdictions, as long as you have a piece of paper or anything that you can write on with all the necessary VAT information, that's your VAT invoice. In China, you have to buy the VAT invoice from the tax bureau, and you have to issue the invoice with the software and the machine provided by the tax bureau. Otherwise, that is not a valid VAT invoice. The last item on the administrative is grouping. Very limited application on the VAT rules. There is a scope, say you could do a head office or combined return. In actual practice up to now, only one company, China Eastern, actually get approved to China-wide combined VAT return. All the other have to file separately in each location. So this basically gives you a feel on how the current China indirect tax system is, and which will lead us to the next section, the indirect tax reform. So I'm moving forward to slide 8 and slide 9. So why do we need a reform? I mean, the system, the current system actually came in place in 1994. Why does it take 14 years, by 2008, before the National People Congress and the MOF decided to say that, hey, we need to take a look at it? 14 years. So actually, if you were to look at the internet, you could notice the earlier part, way back into 1997, there's already comments saying that there's 2 sets of indirect tax and it's inefficient. But I think for various political reasons, no one want to change anything until now. So why do we need a reform? Let's take a look at this picture. You have a service company in the middle, basically a business taxpayer. But when a service company buys supplies, utilities, hardware, service, or anything they buy, there will be either a VAT or a business tax. However, they themselves cannot claim anything to credit. So whatever indirect tax they incur actually gets put into the cost and then add on the margin. And then when they provide a service or sells the item, then there's another layer of business tax or VAT. So you can see that there's already a tax on tax. That's just one layer. A real life example could be, let's say, if a CPA firm is working for providing service to a law firm, then there's one, when we build the law firm, there will be a business tax in there. And then when the law firm bills their client, there will be another layer of business tax in there. So that will be 2 layers. And if it happens that the client, the investment banker, they have to bill their client, there's another layer of business tax in there. There's 3 layers, and no one will get the credit. So there's a credit, there's a double tax, triple tax. And this actually leads to say, well, the country say we need to revisit this, and this is very inefficient. So what do they come up? Let's go to the next slide. So slide 10. So basically, China's authority look at all the VAT or GST around the world, and they say that, yeah, we should streamline our indirect tax system into one integrated goods and service tax system instead of a separate BT and VAT. And they decided on all services will be under VAT. Everyone will get an input claim, and eventually only the ultimate customer will bear 1 layer of VAT. So they try to minimize as much as possible the double and triple taxation in between. So this is what they are trying to come up, and this is what they think the solution is. So where are we now? So let's go to the next slide. So where are we now? Moving forward to, yeah. So basically, in the end, towards the later part of 2011, they finally put out the rules. Say this will be the reform. We call it the B2B, business tax to VAT reform, and Shanghai being the first pilot location to try that out. Instead of rolling out to the whole country and everything, they basically selected one location and a few services, being the transportation service and certain modern service industry. We'll cover that later, to try it out, this B2B reform, and see what it is. Apparently the reform goes pretty well, and the other cities that have not voiced out or have not participated feel that there's a need to join in. So quite a lot of other cities or provinces applied to the central government or to participate in this B2B reform. And by the middle of this year, around July, another circular come out granting the other location to come in over from August to end of the year. So you can see in the middle section, we have the different cities, province, and the dates when they are joining in. Basically, all these provinces and cities have come in already, the last batch being December 1st. Now you're saying that, well, with all the big cities and provinces coming in, what's going to happen after 2012? So China plans in a 5-year period. So every 5 years, at the beginning of this 5-year period, they actually make this tax reform one of their priority items. And they have said that they want to roll out this reform by the end, countrywide, by the end of 2012. So when I was talking to MOF and the Ministry of Finance, they said, what are you going to do? What are you guys going to do for 2013? They said, basically, we have tested Shanghai and we have tested other locations. Now we will try to find some industry and test it on a nationwide basis. Currently on the focus is telecom. That's on the focus for nationwide testing. Transportation, particularly railway, and construction. Personally, I think construction will be difficult to move forward with a nationwide. Telecom should be fairly easy to manage. Okay, so this is the timeline that what they are expecting to do. Okay, so what exactly is the reform? Let's move to the next slide and take a look. What exactly is the reform? Okay, here is what all the changes happened to the reform. Tangible property leasing. Previously, it's under 5% business tax. Bear in mind, business tax have no input credit. So now they move it to 70% VAT, but they allow you to have an input VAT credit. So when you buy the property for leasing, previously you absorb the VAT and you add on 5%. Now you have to pay 17% that you get your input credit back. Transportation service, previously at 3%, now at 11%. This is the one that has been causing lots of noise. The industry says the rate is too high, so this is what is being revisited by the authority. And earlier we mentioned modern services. So what exactly is under modern services is what we can see here. R&D and technical service, information technology service, cultural, creative, logistic auxiliary, and certification and consulting. The scope are very broad. Quite a lot of services actually in there. You see consulting, CPA firm is in there, cultural, creative, advertisement is in there. Logistic auxiliary, basically oil forwarding, loading, warehouses is in there. So lots of things actually come in. All these services previously are under 5% with no input credit. Now it's 6% with input credit. They also introduced something new, zero and exempted. If you would recall, we say under the business tax regime, a service provider or service recipient that's in China will be subject to business tax. Now they are saying that if you're exporting service, then you can qualify for either zero rated or exemption. So basically almost the opposite of the current business tax rules. They also allow a small scale VAT payer, which we discussed earlier, also 3%, no input credit. And then they also borrow the idea of reverse charge with question mark. Why I say with question mark, it's not exactly the same. The end result almost, but the mechanism is different from the reverse charge that you expect under the VAT jurisdiction. Basically, under old rules, there's a withholding of business tax. Now there's a withholding of VAT, but they will give you a credit. We will cover that later on in more detail in the example slide. Okay, let's go to the next slide.
It's Mike here. It's probably worthwhile just to just see what the audience have participated in and seen the VAT in practice. So if you don't mind, I'm just going to ask for a poll on how many people have encountered the VAT changes, and so that will go out now, just so we see awareness of this. Also, if I can remind the audience, if there are any questions you have, please feel free to send the questions through, and we will answer them as we go through. My job is to help Alan if there are any relevant now, or to put them through afterwards. And all the slides which are being produced here can be sent out, whatever I believe has just been raised.
Yeah, Susie, thanks for the question. Susie asks, is it possible to have a copy of the slides? So Mike has just answered that. We'll put together a PDF version, and anybody who wants it, we'll send it through to. Okay, so this poll is just going out now. We're nearly there. We'll give everyone a chance to answer. So it's yes, paying it already. No, but when it comes online, it will affect us. No, we're not in the system, and other.
Yeah,
good old other.
So Alan, it shows us the well, is it finished now? It's complete. Alan, there's that 32% of people are already coming across the points you've raised. Effectively, there's others who are going to start falling into the system. So I'll allow Alan now to carry on and explain a few of the other issues, and then move forward on this.
Okay, I'll pull that off the screen, and we'll go back to Alan's PPT. On you go, guys.
Yeah, let's move on to the next slide. You should be seeing a zero rated. So we mentioned the new concept from the China perspective, the zero rated exemption. So who actually get zero rated for export? International transportation service, but you need specific license. So if you don't have the license, you said I have a plane, I'm flying around, that doesn't count. You need a special license, and then they will be zero rated. R&D service provided for a foreign entity, that's also zero rated. And then there's a design services for foreign entities, also zero rated. Except that if you start designing for property, eventually it's going to be built in China, that doesn't count. Okay, so who's going to get exemption? Let's move on to the next slide. Okay, let's move on to the next slide. Yeah. So basically, we could divide in three groups. The first group you could say is for service render outside China. Let's say engineering service, exploration, exhibition. For these type of service render outside China, it will be exempted. And the middle one is international transfer, as I mentioned earlier, that you don't have the license, but you are providing international transfer, but you don't have the official license, that you will get exempted. And the last batch is most of the companies or the multinational companies will be fall under. Let's say technology transfer, consulting service, design. So I won't go through every one of them, but these are the area that lots of companies have been investing in China, but turn around providing service to the head office. Previously, they are paying a 5% business tax. Now they may qualify for a VAT exemption. So this is the part that we should be focusing on. Okay, so these are basically what the reform is about. And normally, when people hear about reform, they will say, "Well, so now I know the rules. Now I know they're coming. My first question is, how do they affect me?" And there's another group say, "Well, I'm not in the pilot location, not providing any of the services being under the B2B pilot. Does it mean that I don't need to worry about it?" Let's move on to the next slide. Yeah. Yeah. So it's probably easier. No, not this one. The earlier one with the models. Yeah. Yeah. Probably it's easier to explain with a picture than words. So I divided the space into three parts: the non-pilot area, the pilot area, and the overseas. So if you look at the middle section, there's two burgundy box saying pilot company, and there's all the arrows going around. As long as your transaction have anything to do with the two pilot company, regardless of where you are, what kind of service you're providing, whether you're overseas, non-pilot, as long as your transaction have anything to do with the pilot company, it will impact you. So you cannot make a conclusion, say, I'm not in the pilot area, I'm not in the pilot industry, it doesn't matter. Now, what I will explain later on in the example, how does it impact you. Okay, so let's move on to the next slide. Okay, this slide is a numerical example showing how it will impact you when you change from business tax to a VAT. Okay, let's assume A is a transportation company, previously under 3%, and now they become pilot. They fall under the 11% category, and also assume a revenue of 100, and there's a depreciation or newly purchased fixed asset of 20, which is under the 17% VAT rate. Okay, these are the assumptions. Now there are three columns with numbers. The one that has the before reform column is the control of what you're having now, and then there's the two other columns, which is saying after reform, VAT pass on and VAT absorb to data. So let's look at the control column. If we start with 100 of revenue, the 33 is an illustrative figure, it doesn't change all the other expense. And then since you're under business tax, you have the 3% business tax. Depreciation expense, as we say, of buying fixed asset is 20. Then if you run down the number, you have a control figure of 44. That's your current operating profit. Now, tomorrow you become reform and you become a VAT payer, and then you start looking into VAT. Then why would there be, first question is, why would there be two columns? Why I cannot pass on VAT? Why do I have to stop it? Well, bear in mind this is a reform. It's not nationwide yet. So if you are in the reform of pilot location, you will be switching over. But if you're not in a pilot location, a transportation company outside the pilot location is still under business tax. So if your client or your customer is a VAT payer, then of course they're more than happy to receive VAT invoice, so that's why you can pass on. But if your client is still a business taxpayer and they say, well, I cannot take any VAT credit, don't give me a VAT invoice, and if you insist on passing on, I'm going to say bye-bye to you and look for another service provider who still give me a VAT invoice. Okay, so let's look at the pass-on column. If we were to look at the pass-on column, revenue doesn't change, 133 stays the same. Business tax 3 disappear because you no longer need to pay business tax. And depreciation expense of fixed asset becomes 17.09. Why 17.09? Because previously when you buy the fixed asset under the business taxpayer, you cannot take anything to VAT, so your VAT goes to the cost. Now, since you are VAT payer, you can put into VAT credit, so you separately account for the VAT and the cost of the asset, so the 2.91 is actually VAT. So when you run down the figures, nothing has changed. Simply by switching over from business tax to VAT and passing the VAT, suddenly you get 49.91. So you get $5.91 extra, more than 10% increase. So where does it come from? The 5.91 actually is made up from the 3 business tax and the 2.91 of VAT in credit. So that's your 5.91. Now let's look at the VAT sub-column. As I said earlier, if your client is a business taxpayer and you have to make a call whether to force them to pay the VAT and lost the client, or absorb the VAT and still have some profit. So if you choose to absorb the VAT, then your revenue will come down. So instead of 100, you have 90.09, the other being the VAT is absorbed. 33 stay the same. 3 VAT no longer apply. 17.09 be the same reading as I said earlier. Then when you run down the figures, now you come down to 40. Nothing has changed. Simply you become VAT payer, your client is a VAT, you lost 10% of your operating profit because you cannot pass on the VAT. So why is the loss? The loss is the 9.91 that you need to absorb. Although you get 2.91 back and you get a 3 back, you're still short by 4. So we could see that in this example, if you become a VAT payer, not only do you have to look at yourself, you also have to look at what the customer is, and whether you can pass on your VAT and how much input credit you have, and that will give a very different picture as to whether you actually come out as a winner or you lose out something. Okay, so that's a numerical example. Let's go to the next slide.
Alan,
Yes?
before we go, I have a question from Jack, which is you'll be able to answer quite quickly. The question here was if we had an invoice from a PRC company to a UK company, can you refuse to pay the Chinese VAT or business tax? And what your answer would be that presumably that you have to pay the tax.
Well, I think it's, I mean, the tax is definitely there, but whether you want to bear or not, it's actually come down to more like a business decision and see who's stronger in a negotiating position. So if this is a service that only you could provide, then they would say, you could say that if you want to charge me the tax, I'm not giving it to you. But if turn around that this is a generic service, there's lots of pay to provide, and the customer say, well, if you want me to pay extra on this, I'm going to someone else. So the tax will not disappear. It's more like a business discussion or decision and negotiation as to who bears the tax.
All right. And just Jack had a number of points, but I'll just add one more, and the rest of it, Jack, I'll link to later. Is it's not a credit tax in the UK. So your answer there is that unfortunately, that if you are paying this the VAT business tax, you won't get credit against UK VAT. Alan, I'll let you move on to example 2.
Yeah, we have an example later on that shows that under the current B2B regime, there will be some benefit on the example we just mentioned, your question, and we can talk about that later. Yeah, let's go to example 2. Given the time, I don't think I could go through all the arrows on the earlier slides, but I do have a few examples that could illustrate the difference in the area that you need to think about. Well, this one, let's look at purchase. Let's assume C is a service company and would become a VAT payer when the pilot come in. And let's also say A and B are service provider providing service to C, previously a business taxpayer, and now when the pilot come in, the one that located in the pilot region, being A, will be a VAT payer. The one located outside the pilot region will continue to be a business taxpayer. Also assume a service fee of 100 excluding tax. So now when VAT, the pilot come in, when C buys the service from A, C will pay 106, this is 6% of business tax. But the cost to C is actually 100 because 6 is an input credit which C can recover. But if C buys the service from B, the C will have to pay 100 plus the 5% business tax, or maybe they will close up. So the C will pay 105 point something. Then you will say, well, there's the difference is not much as 106 and 105, but bear in mind, in a 106 case, 6 is the input credit, you get it back. In a 105 case, 5 is the additional cost you have to pay. So in this case, depending on who you are, if you are A and C, you are happy, then because you will be saving the business tax. But if you are B, you will be quite puzzled because you either have to absorb the 5% or you might lose a customer. So what else can you do? Another option is to see whether you can move into a pilot location to set up a branch. I mean, obviously, you can move headquarters, but you could to set up a branch in a pilot location and have the branch to serve your customer. But you were to say, well, this is only a pilot, it's going to roll out sooner or later, whole country, why have to go through all these hassles? Then if your client said, can you work with me, move in, or can you absorb the pet? If you refuse everything and a few years later you knock on their door, or unless, and then you probably go somewhere else and you lose a customer, and then a few years later when you become a VAT payer, you knock on the door and say, oh, I'm not a VAT, now I'm a VAT payer, I could issue you that invoice. I doubt that their customer will come back to you if you don't work with them now. So B will be forced to look at some options. Okay. Now let's take a look at the next example, which is, let's say, again, a purchase, but it's a non-pilot location, a non-pilot company. So what would happen, instead of C being in a pilot location at the earlier slide, now C is outside the pilot location and will not change. I mean, C is still a business taxpayer. Same thing, A and B are previously business taxpayer providing service to C. Now, when the pilot come in, A change and B remains the same as the BC payer. same thing, 100 is the charge for tax. Now this time when C buy from A, similarly 106, so the difference being 6 is no longer into credit because C is still a business taxpayer. And C buy from B, same as earlier, 105 point something, no difference. But the position changed. Earlier A and C is very happy. Now A and C is probably unhappy because C have to pay extra. So this time become C and B is happy. So, but this time the difference is slight, small, I mean 1%. However, if this, assuming, if you think this is, let's say, what is the 40/50? If you say this is an advertisement service, and with the bills going into millions or 10 million, then that 1% could be a significant figure. Now, this type of tide turn, instead of B have to puzzle what to do, A will have to be puzzled what to do, whether they absorb the cost, be 1% extra, or A move outside the location and set up a bench and continue to serve the client C. Okay? Okay, let's take a look at the next one. Next slide basically ties back to the question that Jeff asked earlier. Under the current rule, if you have a foreign service provider providing service to a Chinese recipient, so being the recipient is in China, it will be subject to China business tax. So when the recipient pays you, they will withhold 5%, give it to the tax bureau, and then they will send out 95. I mean, assuming 100, they will send you 95. Under the B2B pilot rules, basically saying the rules that, well, instead of withholding BT, now you start withholding VAT. But there's a but, and that's also explain why the question mark on the reverse charge title. But the party that do the withholding, the tax bill will say you could get an input credit for the amount you withhold. So basically, they are withholding tax from the foreign service provider, give it to the tax bureau, and tax bureau say, thank you, but you are allowed input credit for the one you withhold. So in end result, it's similar to a reverse charge. The tax actually come back. The tax bureau put the tax back on the table. The difference being whose benefit it is. The foreign service provider will likely say, hey, you were holding it from me, this is my money, now since you get a credit, please send it back. The service recipient will say, well, true, but the tax bureau actually grant me the input credit, not you, and previously you were happy with 95, so why should I give you the credit? I mean, it's a good headache to have. Previously, 5 disappear under the BT regime, tax bureau will take it as a tax revenue. Now the 5 or 6 actually come back on the table. It's just a matter of negotiation of who gets it. So quite a few supplier and buyer has been sharing it equally, half, both parties win some. And however, if you really is a strong buyer or strong supplier, then you will say, no, if you don't give it to me, I'm saying bye-bye to you. So it's a good headache to have, but you have to negotiate to see who share how much. Okay, let's go to the next one. The next one is to do with a group purchase. In this example, let's say H were to headquarter buying group service from G and then share it with the subsidiary or investee companies. Under the business tax regime, as we mentioned, business tax don't have credit. So when H buys service from G and pays for it, there's one layer of business tax. And when H recharges to the investee company or subsidiary, there's another layer of business tax. So that's why in the middle you can see the 105.2, and then you can see another 84, that's being the recharge. So if you look at the 5.2 and the 4.2, so the same service being purchased at the group basis and charged back, attract 2 layers of business tax and end up paying a 9.4 of business tax. So this actually illustrates the double tax that happens earlier. So now if the pilots come in, and assuming they all become VAT payer, and this is the piloted service and also fall under VAT, then when H buys from G, it will be 106, 6 is the VAT. Again, when H charged to the subsidiary, there will be 6% instead of 84.2 become 84.8, 6% on the 80. However, the difference being one is an output tax, one's an input tax, and the two could be offset each other. You end up with a negative 1.2 of input VAT credit. So this is the big difference as a 9.4 of business tax out of pocket and end with a negative 1.2 of VAT input credit. So there's a quite big difference here. Okay? So let's go to the next slide. So to get back to an earlier question, what's my impact if I'm a pilot location, pilot company, or if I'm not a pilot location, non-pilot industry, what's the impact to me? If you are a pilot location and pilot industry, pilot company, definitely on the financial side, there will be impact, the financial and the tax. The tax rate has changed. If you now allow input credit, whether you could pass on your VAT, definitely there will be impact on the financial side. You see the other arrow saying structural and operational. So why would there be a structural and operational change? Well, structural change is that if you do decide to move in and out of a zone, set up branch, then you will have a structural impact. So there will be a structural side. And operational impact is previously under the BT regime, probably all your accounts and your books is set up under business tax, and under the VAT regime, the chart of accounts is different, the reporting requirement is different, the filing is different, the document you need to keep track and how you issue the invoice is different, so your operational will also have an impact. Okay, next slide. Next slide is what would happen if I outside the zone non-pilot. So hopefully by the early example we can see the impact is almost the same. Whether your customer has changed, whether your supplier has changed, whether you could pass on your VAT, whether you have to absorb your VAT, basically the impact is almost similar, except that you probably don't have to change your accounting system to keep track of VAT because you're still on the business tax. Otherwise, your financial and your structural and operation more or less will be impacted in a similar manner. Okay? Okay, so let's go to take a look at the next one as to say, so what we can do. So normally we have been helping our clients or we have been suggesting our clients to do this if they want to do it themselves, is to do an impact analysis and planning, basically mapping the current VAT or the B2B rules into their current model and say, previously all these transactions may be under business tax, now if the new rule come in, where is my impact, and what is the problem that's going to cost me, and then map out a plan. So, and then you have to wait, it's a pilot program. So when a pilot reaches to your location, you put in place, that's a step 2, the implementation, and you train the transition to become a VAT payer. The item 3 being that once you go through the process and transition yourself as a VAT payer and do the filing, you should do a post-implementation review to see whether you miss out anything, particularly under rules, under the current China rules, which lots of areas may not be clear, practice could be different. So these are the stage we suggest that we're trying to do. Bear in mind, lots of companies now use ERP systems and have to reprogram an ERP system from the business tax to a VAT to take some time. So you need to start early and to get your vendors involved and design the system to get ready for the B2B. Okay. So basically that covers the basic of what the reform is and what you need to do. So the next section is that what exactly we see when Shanghai rolled out the pilot. We collected 20 questions. Yes?
Alan, just before you go on, it's probably a point just to put out the other poll question, which is how many people are seeking help or have consulted on these VAT changes. So there's a poll just going to go round raising that. And in the meantime, before we move on to your insight onto how Shanghai's worked, Alan, can I throw a question over which has been raised by Nigel? One of the questions he's raised is, we provide intellectual property services to agents in China. Should they reduce their payments on account by the 6% VAT?
Intellectual properties, intellectual what service?
Intellectual property services. They provide IP services to agents in China. So I suppose what where Nigel is asking is, should they be charging VAT and account for the 6% VAT on intellectual property services?
There's previously the service will be under BT unless they have been specifically exempted. Assuming they are not exempted, then they're under BT. Under this situation, then there will be the VAT will come in. So the buyer, instead of withholding BT, now they will be withholding VAT. But the difference is, after they withhold the VAT, they actually get an input credit back, as we see in the earlier example. So whether they should be reducing the amount, from a tax perspective, yes, they have to withhold and send it over. So when tax bureau gives them a credit, how they share the credit, should they return it to you or should they keep it? Then the two parties will have to negotiate to say how to share the credit. What we have seen is quite a few of the transactions being shared 50-50. Each takes 3%. So the buyer gets 3%, the seller gets 3%. Both come out to be better than the previous situation. But again, it's a negotiation as to who shares how much.
Appreciated, thank you. Alan, just so the results, we're just sharing the results now, which is expected is that a number are actually dealing with these VAT issues themselves and have an awareness of it. But it sounds that, a larger proportion, 50%, are outside of the discussion and are basically just watching and waiting to see how things are developing. So it follows our expectation that generally there is a minimum awareness, but people are starting to get more knowledge on how the VAT system is working. I'll let you move on now to your insight.
Okay. So when Shanghai rolled out the pilot, there's quite a lot of questions going around because the rule is basically not absolutely clear. And then we collected 20 and to share with all. The first question is it necessary for enterprise to take the initiation to self-assess? Basically say, well, I know I should fall under this, but somehow I didn't get informed or notified by the tax bureau. What should I do? The process of the tax bureau is informing the taxpayer is not very advanced. Basically what Beijing has been doing, I'm saying Shanghai, but I use Beijing's reference. Beijing have two separate tax bureaus, state tax bureau and local. Shanghai also have two names, but they are same group of people. So in Beijing, the local tax bureau who look after the business tax will say, oh, this is the batch that needs to get from B to V. Then they will inform the state tax bureau, which is the one that look after VAT, and it's up to the state tax bureau to reach out to the taxpayer. And the method they use is that they will pick up the phone and call the taxpayer based on whatever record they have provided before. The record may have outdated, the contact person may have changed, number may have changed, and when they get through the call, they will say, hey, there's a B2B, you need to come get training. So they didn't really make it clear that the taxpayer has been selected to transition from B to B. So some of our clients said, we never received anything. So when I asked, do you receive a call and say training? They say, yeah, but that's the training. So I'm not there yet. I didn't go. I just ignore. And actually, it's during the training that they hand out the forms and tell you you have to switch over from B to B. So if you think you are in the industry and being the pilot, and somehow you did not receive any call from the tax bureau, make sure you reach out to them. Otherwise, when they find you, it's a lot of explanation to do. Second question is, well, if I have a headquarters in one location and a branch in one location, one of them is in the pilot, one of them is not, what do I need to do? Basically, they go by location and entity basis. So if you have an entity in the pilot location, they will be switched over. If your other entity is in a non-pilot location, they will continue to be a business tax until the pilot reach their location. Also, we have clients asking, say, hey, I have branch in all over the place. Since the rule allows I could choose one region to report, can I do it? The rules, yes, but so far we only see China Eastern get granted at one combined file, one location, all the other still have to file separately. Item 4 is being a free trade zone. If I provide service to a free trade zone, does it consider as an export of service? The answer is no. You have to the buyer have to be physically outside China. So any of the zones, it doesn't count, so that's not export of service. Item 5 saying that if currently I am enjoying preferential BT business tax treatment, and if I were to switch over to VAT, what would happen? Basically, the rules provide a transition period. If you enjoy preferential business tax treatment, they will also grant you preferential VAT treatment. You might have to pay first and get refund, but you will not lose your preferential treatment because of this reform. Okay, next one. Next slide, basically, question 6 saying that related to zero rated. The rules come out in December of 2011. The Shanghai pilot come in place in January 1st. But the rules say that export qualify for zero rated or exemption, but there's no further guideline. Not until April that the tax authority put out another guideline saying if you're zero rated, how you treat, basically treat it as the export of goods, exempt credit refund. And then the question is, so has Shanghai been doing it? Yes, once the circular come out, Shanghai actually has been processing a zero rated. Item 7 is about exemption. Instead of zero rated, what about exempted service? Can I simply report zero? No, that's not the case. What we've seen in Shanghai is different districts have different treatment. In some locations will say, well, since you think you are, you report zero. Some location tester will say, well, you need to apply, let me look at it first before you could report a zero. And some location will say, no, the rules are not clear, you pay first and then we refund later. Beijing have a slightly different approach. Beijing has been switching back and forth on the approach. Originally, they say that yes, if you think you are, you come and register, you look at it. And then they say, no, everyone has to pay first. And eventually, after now, the practice is, they say, well, if you think you are, you report a zero. Don't submit us anything. We will not take. We will not give you any blessing. We will not give you any comment. But when the SAT issue the rules, we will take a look, see whether you qualify. And if you don't qualify, you have to pay back, which is fair. But they might also charge a late payment interest, which I don't think is fair. But this is what the practice is at the moment. Question 8 is, let's say if I enter a design service for overseas company, however, the overseas company actually providing service to another domestic company, would I qualify for what we call the export of service and get either exemption or zero rated? My thinking is yes, but the rules is not clear. As long as your customer or your buyer is a foreign company, then I would say that's an export of service. When they providing their service to a domestic company, it's a separate transaction and will be looked at separately from a VAT perspective. They shouldn't be lumped together. But again, the rules didn't say that. That's only my personal view. Okay. Item 9. Previously, I'm reporting BT. Now, how do I know whether my supply has been subject to pilot, whether I should report BT or VAT? Basically, when you want to send the money out, you have to get tax grant. And when you get tax grant, the tax will look at it and say, hey, this is whether it's under BT or this is under VAT. So they will tell you what tax you need to report. Item 10. If I'm a small-scale VAT payer, my rate is 3. When I do have to withhold, so what rate should I use? Basically, you withhold using the rate that is applicable to the service, not applicable to you. So if the service is subject to 6%, you withhold at 6%, and not withhold at 3%. Okay, next slide. Question 11 ties to the transition period. Basically, they're saying, is there any transition policy or transition period for contracts signed before the pilot come in? The answer is no. So if you, except for non-tangible property leasing contract, which have a transitional period, all the other services actually can switch over. When you go into pilot, you become a VAT and a contract, which has been fully completed. The remaining portion will fall under VAT. Okay. Basic item question 12 saying that if an enterprise provides service and receives payment before pilot starts, I have to ask for to refund, what to do with it. The answer is you have to, since you already pay PT under the PT regime, the rules is that you have to go to the local tax bureau and apply for a business tax refund, you cannot offset it as a VAT as soon as it's a VAT credit. It doesn't work that way. 13, the enterprise is a pilot taxpayer. The service or contract was signed before the pilot, service start before the pilot, but it lasts into the pilot location and receive service fee after the pilot start, whether it's BT or VAT. So, and let's look at this from the question here is, the principle here is when exactly is the tax obligation arises. So if the tax obligation arises, then it will be under that particular tax. That's a technical position. However, in practice, when last time in 2008 and 2009, when there's a mini reform, basically it comes down, the tax will look at the invoice date. So when the invoice date, and they look at what type of treatment and then applicable. So that's basically the practice. Similarly, Act 14, enterprise receives repayment before pilot start, issue the DP invoice, pay VAT, service that we provide later on, revenue recognized after the pilot come in, whether it should be VAT or BT. They basically the same principle as earlier in question 13, when you look at when the tax obligation arises. But again, in practice, we suspect that eventually the tax bill will look at the invoice date, as it is practically impossible for them to look at a contract and then go back and determine when exactly the service is provided. So I think more from a practical perspective, it will be from an invoice date. Okay, next question is basically we have people asking, say, hey, if I buy a lot of things and have a lot of input credit before the pilot come in, will I get an input credit when the pilot starts? No, but if you're under a business taxpayer, before you get your general VAT taxpayer status, whatever thing you buy and the input VAT you incur will not be counted as input VAT credit when the pilot starts it. 16, if I'm a holding company and providing food share service to my investee company, how does the pilot affect me? Basically, you should look at the different kind of service you're providing, whether they have been piloted already, and whether they can be carved out and charged VAT instead of charged business tax. Not everything has come in. If you say HR service hasn't come in, but consulting service have come in, legal service have come in, so you need to look at different types of services. Okay. Then 17, the enterprise already a general VAT payer before pilot. The principal activity is trace of good, but it also provides minor other services, which is under BT, but it's now become a pilot industry, pilot services. However, these services it's small, the revenue are small, and it doesn't meet the 5 million RMB B2B threshold. So what should I do? Basically, there's a circular saying that in this case, you combine all your activity. You look at the activity separately. So when the BT service gets pilot, even though it doesn't meet 5 million threshold, you combine it with your principal activity and you record it as a general VAT payer, and you also get into credit. Okay, let's go to the next one. 18. Basically, if you have people asking, say, when a pilot started, I become a pilot, but I didn't reach the 5 million threshold. However, later on during the year, I met this requirement. So should I apply to become a general VAT payer? The answer is yes. Because if you don't apply to switch over when you meet the threshold, at the most extreme case, the tax bill will say, whatever you report on the BT to the local tax bill, it's your business, you take care of it. But being state tax bill coming in, you should be a VAT payer, please pay the again at 6%. But you cannot recognize any input credit because you are not officially a general VAT payer yet, and you're not allowed to issue VAT invoice. So basically, you have to stop the input credit, and you have to pay both BT and VAT. That's been the most extreme case. So when you meet the threshold, do apply. 19. My company is mainly engaged in appliance repair. Previously, it's under repair, under VAT. But I also respond for transportation of these appliances, which is under VAT. Now, what's going to happen? Under the old regime, there's something called mixed sales or concurrent sales. So the principle here is, if you have a mixed sales or concurrent sales or mixed business, if you could separate them clearly and apply the VAT, you could apply apply different rates to it. But if you group them lump sum together and you don't separately reported it or keep track of it, then the tax bill will say the one with the highest rate applies, so you use the highest rate. The last item being that in some locations when they get B2B, they say, hey, I cannot, the VAT invoice is not recognized. What is the VAT credit? What should I do? So when a tax bill tells you that, hey, they cannot vet this invoice not qualified, then you need to look at the supplier and say, hey, do you issue some, there's some mistake in the issuance, and then up to them, they could change it or fix it. But this only happens in Shanghai. When it comes to the Beijing pilot, I think this bug in the system has been fixed. Okay, so these are the 20 questions that we saw during the Shanghai pilot. So I saw something moving on the screen, but I guess I can keep going to the next slide. So basically, the idea of this B2B is to move the VAT payer into the VAT and then allow the business taxpayer into credit. So the view is, with this, then technically there should be a reduction in tax burden. However, because of the different tax rate and the different into credit position, then not necessarily everyone will get a reduction in the tax liability. So different locations have put out a financial subsidy provision. Basically, not all the pilot locations have come up. Basically, the location we listed have. They say that if you experience an increase in tax burden because of the B2B, you can apply to the local authority and get a relief. Not 100% relief, but there's something coming back. So this is basically the financial subsidy that local authorities is offering. Okay? So that concludes our reform section. I have still a little section at the back say other indirect tax development.
Alan, it's Mike here.
Yes.
In the interest of time, can we probably, because the other areas developments probably are a little bit more complex. So shall we answer some of the questions which have been raised to put to you during your presentation? Thank you for the insight, because you've given that you already preempted a lot of the questions coming through by putting the 20 out already, which you've answered as part of the whole pilot study. But we've had a few here, so I'm just going to raise one again from Nigel, a follow-up from the previous one, which I'll raise to you. When China invoices us for work they have done on our behalf for intellectual property services, I assume they will now be charging us 6% VAT. Will there be a reverse charge treaty agreed with China as we have with Europe?
No, China doesn't really put out a reverse charge. They kind of model the position. So if this is subject to VAT, then they say the Chinese buyer you have to withhold. But after you withhold, the Chinese buyer, if they are VAT payer, they actually get an input credit back. So it's more or less very similar to a reverse charge, but not exactly. So there's no real reverse charge that you see under the European system. But China do allow the buyer to get a credit. So again, how do you share the credit? It's a matter of negotiation.
Thank you. The other question, if I just go up, is on R&D. I'm just going to it now. Yeah. This one is from Mark. It's mentioned. His question is: you mentioned zero-rated VAT for R&D services to foreign companies, so foreign entities, and VAT exemption on design services. Mark's company provides design and product development services, industrial design and graphic design to foreign clients located outside of China. Currently, he has them paying his Hong Kong parent company. If I change these to be billed from the WFI, will there be zero VAT, or will I have to pay VAT at 6%?
But currently, who's paying and who's billing? I mean, who's providing the service and who's billing for the service?
We don't have. All I know is that it mentions it's paying. It sounds like a Chinese client is paying the Hong Kong. Oh, Hong Kong is billing. Foreign clients are paying to Hong Kong.
But if Hong Kong is billing and the foreign client is paying to Hong Kong itself doesn't have indirect tax. So there's no BT or no VAT under Hong Kong. So these services should not attract indirect tax in Hong Kong.
Right.
Yeah. I mean, although Hong Kong is part of China, but the tax system is very different between Hong Kong and China and Macau. So this B2B only applies to mainland China and not Hong Kong and Macau.
Understood. Just so everyone is aware, is that a number of questions come through. We will actually try and put some comments against them and come back to everyone in a little bit more detail. Another question has come, loads of questions, does intellectual property come into the zero charge rate as it is a R&D cost? And that question is from Nigel.
Well, if a Chinese company is providing R&D service to a foreign party, yes, it qualifies for zero rated. But again, the definition is there, and the practice is you have to work with your local tax bureau and to see how they actually put it in place. So the answer is yes, you could certainly qualify, but and then it's up to you to convince them that your service actually fall under R&D and your China entity should be zero rated.
Understood. As we've slightly gone over the timeline, I will, Mark, I know you put some other comments through. Mark, we will come back to you and answer that one, because you're right, it is complicated. So we'll come back with some comments to you on that separately. Alan, again, I'm saying in the interest of time, it's probably worth now wrapping up. I think from your perspective, you have an insight, you've given a great insight into the VAT side. And as I deal with clients coming through from the UK, I find this extremely complicated and very difficult area sometimes to translate or get clients to engage with. And I think this is going to become more important as the pilot extends. So I'm wondering, Alan, if you want to do a few closing comments as to what happens next and where you see this all developing to as your closing remarks.
Okay. Well, I mean, although the pilot is here, the rules are here, but basically the rollout has been by location and by industry, and not everything is coming here. So if you're coming into China, then you should definitely look at what is the indirect tax impact to your industry or to your business. And the reason is once you put in place something, and then later on you realize that this is not the most efficient way, and you want to change it, and it will attract taxpayer attention while you're starting switching it back and forth, that's definitely not a good idea. So make sure you think through and put in place an efficient operation or efficient position before you go ahead and do the filing. So this is a very important one.
Appreciated. And just for the interest, I'm not stealing the moderator's thunder here, we will make the slides available and also some of the comments with regard to some of the questions to share amongst the rest of the audience. I now pass back to the moderator.
Sure. Well, thank you very much. An extremely important business topic for anybody engaging in commerce with China. Am I right to say we record this? Am I right to say you'll also make that available? Okay,
That's
great.
correct, yeah.
So what we'll do is what we're trying to do with these webinars is they should last forever. So we record them and we put a link on our website, which if a lot of the information was a bit too heavy to digest in one bite, then you'll be able to go back and have a look at it again and revisit it in the future. All right, well, I'd like to thank very much PwC. I'd like to thank Mike and Alan for their work. I'd also like to thank Wayne, who's one of those unsung heroes, who does all the behind-the-scenes bits and pieces. So thank you very much for your time. As I said, the goal of these webinars is to give companies operational, practical work advice, for their work in China, and we'll continue to do that. If you have any suggestions, any feedback, I'll give you my details at the end. If there's topics that you'd like us to cover, that you'd like us to approach on this platform, then also please get back to me and feel free to give your ideas. So, a couple of things coming up. In the UK, our events, we have a government changeover briefing with the FCO that will be held in the FCO. on the 11th. I think that's next Tuesday, if I'm not wrong. Also, we have on the China Association lunch with Richard Graham for the APPCT. That is the All-Party Parliamentary China Group. I love acronyms. On the 18th, also a very meaty event here, a dialogue with China, implications and opportunities of the 18th Chinese Communist Party Congress. This covers a lot of issues as to the changeover and what's going to happen as well. It's attended by people from the Wilton Park Conference with the Chinese Communist School. They're over here at a conference. So this is definitely something also worth looking at. Our next webinar, our next topic will be, as you can see, will be your online presence in China. So the differences between how the internet works there, how web design, social media strategy, all of that kind of stuff. So it should be really interesting, and that will be, well, at the same time and same place, kind of. The 17th of January, then a members briefing. One of our board members from Beijing will be over to present a members briefing. And in China, if for those of you there are a few bits and pieces for you to have a look at as well. So please check out our website and please stay involved. As I said, we're nearly there. Any feedback that you have, any suggestions, any thoughts, please get back to me. So once again, thank you to our speakers and thank you to our attendees. In the UK, good morning. In China, good evening, and in between, well, whatever it is. So have a great day and thanks very much for your time. Bye-bye.
It always feels, because you've got no one responding to you. It feels